Alrighty, folks, there's an elephant in the room, in my opinion, and that is Q3 GDP is going to be a monster. Will it be 5.5? Will it be 5? Will it be 4? I don't care. Anything north of 4 is a monster in the US economy. So I want to step back from that number and say, is a recession in the offing in the next 12, let's just say by the end of 2024. Taylor, I don't know if you saw this, but Goldman Sachs has taken their recession odds all the way down to 15%, I believe, for the next 12 months. But what says you? Where do you think the odds of a recession in the next 12
Yeah,
months are?
I'll certainly take the over on 15%. And when I take a step back, and I was on the New York Stock Exchange a couple weeks ago, and I delivered this conversation in an interview about there being three potential points that the economy could move to in the future. And so I think when you take a step back and look at things right now, the first one is the fact that the market is pricing in kind of Goldilocks, that we can continue to move forward with the economy growing and that we tame inflation and inflation becomes a non-issue and we perform that soft landing, right? There's no way to justify stock valuations where they are right now without that mentality.
Yeah, agreed. Well,
So
Janet
that's,
Yellen told us yesterday or the day before that she feels very good about a soft landing. So that's got to make you feel better.
yeah, her and Jerome Powell, both the
Yeah.
pipers telling us that we're good.
Yeah, exactly.
The second one is like you look at things and you say, okay, the Fed realizes that inflation is an issue and they think it might or might not be abating. We'll see. But they have the ability to raise rates too quickly and cause something to break, like the banking industry, that will force us into a recession. There's real odds of that happening as well. And the
Agreed.
third one is something that's becoming more of a concern as of recently, and it's a reflationary trade playing out here in the US. And all of a sudden, you start to see oil and gas start to reflate and commodities start to reflate, and inflation takes hold again, and the Fed stays behind the curves, and inflation takes back off. And then the Fed has to get aggressive again. So there's kind of like three things that can play out. Like I'm an investor, so I look at the first one and say, okay, if you have a soft landing, where do you want your exposure? You want risk assets. You want to own stocks. I look at the second one and say, okay, if the Fed takes rates too high and forces us into a recession, where do you want there? You want bonds. And the third one, you look at this and say, inflation takes hold. We saw that in 2022. You really don't want stocks or bonds. You want alternatives, right? You want some sort of an alternative.
I'm staying in cash. Cash 5%. I'm good.
There you go. So at the end of the day, like as someone who is an investor, you want to have pieces and components of all three of those underlying in your diversified portfolio, because I don't know that I can give you a great answer as to which one of those plays out.
No, I mean, if I was a bet man, all those odds seem about a third to me. It's like
Well, which third is the most probable?
I'm going to stay in cash. I'm good. I'm going to stay in cash. Make my 5%. I don't need to risk this. But it's a really interesting question because, again, a lot of kind of if you've only experienced the last 3 recessions and you haven't studied history, this environment is confusing you.
Very much so.
Right? Because the last 3 recessions we've been through have been everything's down, blah, 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 and then we build from there. I would ask people, and I've talked about it on my channel a bunch, go back and study 1990. That's the last kind of recession. I was in college, just starting college, and it was not a great time, but it wasn't this, watershed moment environment.
Sure.
And I think something we've been talking on my channel for a year, it's looking more likely. And you may call it a soft landing. I don't really like that title. I think it's a rolling recession.
Fair.
Because we have had many parts of the economy. The one I study the most, housing, go through a depression. Right? 40% transaction crash is a depression. And we're going lower. I think we're breaking.
Hold on. Let me call time out there real quick and just say from the no, that's not fair. From the outsider's perspective, taking a look into the housing market, there hasn't been a crash. There may have been a crash in transactions, but people are looking at their housing prices and going, we're good. Like they're fine. They've launched and then they bounce sideways. And I understand that home buyer is looking at it and saying like, there's a depression here because I can't afford anything. But what is it? 68% of people own their home. Maybe you can correct me on that.
It's 66 or 66, 65, depending on whatever. But here's the problem. And it's all you crash bros and doomers have been wrong for so long. You guys really should go back to school. You're talking about an asset price.
Sure.
I'm talking about GDP. Asset prices aren't in housing.
Fair.
right?
Fair. Well done.
Is it in the GDP?
Well done. Well done.
Transactions are. So housing has been a net negative to GDP for, I think it's 8 quarters, might have been 7 quarters.
Yep. And so and even and you would say this much better than I would, but it's kind of two components. It is the transaction that is an existing home, which causes new furniture to be, things to be repaired, things to be changed, whatever. And then it's the new build on the other side, which is obviously the massive GDP push.
Yeah. And so what have we seen? So again, these are all numbers because I geek out on this. And you're not supposed to know these numbers, so these are pure guesses from you.
Sure.
In a normal year, like 2019,
yep.
Do you know what % of total transactions new home building is?
No, I don't, but I would guess somewhere in the 18 to 22% range.
It's typically 11%.
Okay. I'm way high. Now they're 40?
So, yeah, they're 38% today.
38, yeah. Wow.
So again, we had a housing depression. 40% less transactions in existing home sales. New home sales are up, 10% or whatever they are. And then you put those together and bingo bango, you got 38% of the market. But 40% crash is a depression because you have all that commission, all those inspections, all those titles, escrow. This is real GDP. This is real income that people aren't making that's pulling it down. I believe housing could possibly be net positive slightly in Q3, but maybe Q4. And that's all because of new construction.
Yep. That is a massive, if you say 38 from 11, that's a 3.5 time multiple, right? I mean, that is massive. And it's not due to anything but and maybe you can tell me this, like, are the new this would be an interesting one. How much increase in new build has there been? Has there been a 50%?
So if you just look at new build,
that's
apples to apples, whatever you're talking about, it's up about 22%, 21%. So they are building more.
Sure. I knew that was
their competition
correct
is way down, right?
Right, because no one's selling their house at a 3% mortgage and taking out a 7.
No, the Fed broke housing, man, and nobody called it except this channel. So again, I do think so. Back to the point: rolling recession. Housing felt it first, most interest rate sensitive. Blah blah blah. It's now coming out. Right? It'll come out. If it's not positive in Q3 or Q4, it'll be Q1. And then we have services. The craziest thing I read here recently is Southwest Airlines talked about their August bookings being disappointing.
Interesting.
Have we stopped revenge travel?
Interesting. It was something that no one thought could be stopped. Well, that's not fair. It's something that everyone thought would be stopped, and then it didn't. And then it's like, okay, when will it ever stop?
Apparently, at least at Southwest, it started to crack in August.
Interesting. Yeah.
So again, these are all things tied together. So again, I think a rolling recession is most likely where one thing crashes. So again, think about housing depression, revenge travel to the moon. Now revenge travel coming in, housing starts to be positive. So
so essentially you're saying right now the bellwether that's kept everything together is services, right? Goods
absolutely.
Went through
no question.
Goods went through a depression, or not. Yeah, that's not fair. A recession.
Yeah.
Goods went through a recession.
Housing depression,
goods
stuff,
recession.
Goods recession, services, party time.
Yeah. And that's the thing. And the thing with services is that is what is the labor inflationary driver, because the only cost associated with most services, you think about a restaurant, et cetera, is that service, right?
Yeah.
The booze at a restaurant is this much cost, and they mark it up this much, and the waiter has to bring it to you, and they get paid to do so. And it's all that labor's cost.
Yeah. So this is going to be very interesting to see if services. That's what I'll be. I mean, that Southwest article was important, and I don't because again, Southwest is I don't think I'm saying anything crazy. It's a cheap airline, right?
It is.
So if they had disappointing bookings, what does that mean for United and American and others? And what does it mean for hotels? And what does it mean for this or that? So,
well, I mean, and at the end of the day, you've seen a lot of that on the consumer in general, like, not on the services side, but you take a step back and you look at things, and maybe this is going back to the goods conversation, but like you've seen a trade down in places like Walmart and Target. They've all spoken about the fact that people are starting to finally see that they need to curb their spending some. And now it sounds like it might be going from the good side where it was to the discretionary service spending side.
Oh, did you see the horrible earnings from Dollar General?
No, I didn't. No,
God, they were horrible.
Interesting.
Like If you're like, I don't know where you trade down from Dollar General, but man, that was horrible. That was like 3 weeks ago. Huge miss, huge this, huge that. It was like, that's not good. So
I was in a
I
strip
don't.
mall going to my sister's, and I realized at the last minute that we didn't have. I have two little girls, diapers, swim diapers, and we were like, let's run in Dollar General. And I ran into one of them. And this is not saying I'm above Dollar General by any stretch of the imagination. I don't care where I shop, but it looked like a third world country on the inside. So the
Yeah,
fact that you say that does not shock me whatsoever, because I walked in there and I was like, I don't know how you could find anything here. This is the
yeah,
disaster. There's stuff on the floors. The shelves are a mess. So that does not shock me whatsoever.
yeah. Lots of stuff going on, folks. So at the end of the day, let us know below. Do you think we'll have a recession in the next 12 months? Say yes or no, and we'll just talk every week. Taylor, where can people find you?
Yeah, find us at Life Goal Investments. We're on both Instagram and TikTok.
Thank you, buddy.
Appreciate you as always,
Appreciate.
Michael.
Yep. Later.